of introducing Phil Nathan. This morning, Phil will complete his third speech in the specialty speeches module. He's working on his Advanced Communicator Award. The project is called Sell a Product, in which he is to convey ideas and information about a service or product. In this speech, Phil is skillfully used the 4 steps in a sales presentation to get our attention, generate our interest, build desire, and call us to action. Phil is to select a product or service in which he or she, which are you today? Which he is interested and knowledgeable. Since one of Toastmasters' overall objectives is to assist members in becoming more successful in their business or profession, this project gives an opportunity to practice your sales pitch. In his third career, Phil has reached the highest level of achievement in assisting investors and business owners with their income tax planning and preparation. He is an enrolled agent and a master tax advisor for H&R Block in Rancho Santa Margarita. And this morning his speech title is, "It's Not How Much You Get, I Know the Rest." Please welcome Phil Nathan.
A second to get started here, please. I guess that's about as good as it gets. Okay. Well, as this meeting began, tis the season. Tis the season to begin thinking about your income tax for 2010. And for those of you who are smart enough and wise enough to use an income tax preparer, let me talk about okay, anyhow.
So I'll get a good video here going.
Let me talk about who are the people who can prepare your taxes for you. And there are 3 professions who are able to do that. The tax attorney is certified public accountant and enrolled agents. As you know, certified public accountants study all of the area of accounting and include taxes very often in their practice. An enrolled agent spends time and has to take a series of tests regarding individual returns, corporate returns, estates and trusts in order to become enrolled. By enrolled, it means that you're able to practice before the IRS. So that's hence the term enrolled agents. There's also people who are just tax preparers. Now they can prepare your taxes, but they cannot represent you before the IRS as one of the other 3 professions can. What's going on here? Okay, now, I used to be an investment banker, and as such, I was able to assist people in strategizing to keep the most money from the sale of their business. Until 1986, when Congress, in its inevitable way, put in the Tax Simplification Act, which at that point made it impossible for anybody who wasn't a tax specialist to assist people with their taxes. And it's been downhill since then. So let me talk about, people always ask, what are red flags? What is the government really looking at when you're doing your taxes? Well, IRS is pretty smart, because what they do is sample various areas every year and determine where they think the most revenue can be generated by investigating. Therefore, the red flags keep changing. Right now, the red flags are, as I've shown here, Schedule C. The main thing there is what you're doing a business or a hobby? Now, the IRS says that in order to be a business, you have to make a profit in 3 out of 5 consecutive years, so that anything less than that could be suspect by the IRS. Now, obviously, there are ways around that, but that is their safe harbor position. Also, as you recall, the IRS got into all the Swiss banks last year and got the list of all of their investors so that they could go after them for for evasion of taxes. Okay, now, the one thing is to take advantage of expenses. And there, the idea is to keep records, receipts, and logs. Because if you can keep a record or have a receipt of an expense, a legitimate expense for business, it's valid. And don't worry about whether it's high, greater than you think the average might be. That is irrelevant, as long as you can show that you actually spent it and the purpose of it was business, you can deduct it. The other thing is to make sure you keep your bank account, your business bank account, utterly separated from your personal account. First thing the IRS is going to ask you if you're audited is for your bank account. And if your bank account is, your personal things are intermingled with your business things, you've got a problem on your hands. Now, there are ways to use your bank account on some of your personal things, but you have to know how to do it. In general, if you're a neophyte, my advice to you is make sure you have a separate bank account. If you don't have one, open one up with Dan, because every individual who's in business should have their own business bank account. People ask me about home office expense. Gosh, I'm afraid that's a red flag. Hey, how many people in the last 10 years have started working out of their home? I mean, it's gone up dramatically. So home office expense is no longer considered unusual. However, there are 2 basic rules to qualify. One is that the home office is used regularly and exclusively for your business. And second, that it's the principal place of your business. For example, as a teacher, you work in a school and have a room that you teach in. The IRS considers that your office. Therefore, even though you work at home grading papers and doing other tasks like that, you can't qualify for a home office expense. But the home office expense is a beautiful expense because it allows you to take homeowners insurance, your homeowners fees, your utilities, water, light, electric, myriads of things that you normally cannot deduct. And another thing that a lot of people don't realize is you can include storage of inventory. Let's say Susie keeps cosmetics and literature in her garage. And she has shelving in her garage for that material. Well, now we can claim a portion of that garage as part of her office expense. And the shelves that she put up, we can also deduct. So there's a lot of ways to improve your expenses when you have a business or are self-employed. Now, here's the one I really love. the self-employed, pre-tax retirement plans, and health insurance plans. Now, I want to watch here to see how many people get bleary-eyed when I show the first page of a 1040. That usually, immediately the crowd goes dead. But all I want to do is show you where that little purple arrow is, because that is a beautiful place for taking deductions that are very useful. The reason being that is below, that your adjusted gross income is after you take these deductions, so it reduces your adjusted gross income, which I'll show you in a minute is a really an advantage for people. Now, here I've enlarged that section of the return, and I'm showing the self-employed retirement and also health insurance deductions. These are both 100% deductible before you get to your adjusted gross income. So any health, whereas on your regular individual taxes, when you have health insurance expense, you have to deduct 7.5% of your adjusted gross income before you can deduct penny one. However, if you have your own business, you can deduct all of your insurance costs up in front to reduce your adjusted gross income. It's a beautiful, beautiful deduction. Now, for a minute, let me talk about the different types of deductions between your itemized deductions on your what's called the Schedule A, which is your normal home, like your home mortgage and your real estate taxes, charitable contributions, etc., and your business deductions, which are shown on Schedule C. On Schedule A, you can deduct charity donations and auto license fee 100%. But when you get to issues like professional fees, like my fee, an accounting fee, a lawyer, or dues, or subscriptions, or a myriad of other deductions, first you have to deduct 2% of your adjusted gross income. Now, we've already seen how to reduce our adjusted gross income, but then on your Schedule A, you have to take 2% of that before you can deduct penny one from your taxes. So anything that you can put on your business deductions, Schedule C, that's 100% deductible, and it's always to your advantage. Another sneaky thing is if you have a loss in a year. There's what's called a net operating loss, which technically is carried back. The default is to carry it back like prior years, which means you have to, excuse me, you have to amend your previous returns, and so forth. However, you have to elect to waive the carryback so you can take it in future years. But if you don't do anything, it's gone. You have to elect not to do it in prior years to take advantage of it. Now at H&R Block, we have what we call peace of mind. We are so confident of our abilities to do your taxes that if we make an error, we will pay any underpayment and penalty up to $5,500. Plus, if you're audited, we will do your audit, take care of your audit at no charge. Ask your tax preparer if they will do likewise. I don't know anybody else in the business who does. So in conclusion, to legally pay the least taxes, have good records and a separate bank account. Know that the key is knowing the tax code. Work with a qualified preparer who stands behind the work that they do. And remember, it's not how much you get. It's
how much you get achieved.
Thank you.
Thank you, Phil.
Thank you.
Please
Oh,
take a
if
moment.
I may interject.
Yes.
I have some new calendars just came out from the IRS for 2/11, Game Plan for Success. And it tells all of the times when things are due, et cetera, and gives you a lot of advice. So if you want one of these, I have a limited number that I just got from the IRS a few days ago that you can have after the meeting.
Thank you.
Thank you.
Is that the one where April 15th it just says, how much did you make, turn it over?
It says, go to jail, do not collect $200.
Okay.
There you go.
That's not funny. Go to jail.
Okay, to the next evaluator,